Hey folks, it's Vic Noble here with the weekly trade example for June the 14th, Friday, June the 14th, 2013. You know, one of the key concepts in trading that most people have heard about is that it's best to trade with a trend that's in momentum and that the trend is your friend and all these other expressions. And the idea is that you want to continue to trade the trend until it's over, and that's sound advice. And that sounds kind of stupidly obvious, but how do you know when the trend is over? How do you even know if you're in a trend? And when and where would you expect a trend to end, and what would the signs be, and when would you start to trade in the other direction? So I'm going to show you an example of exactly what I'm talking about, and we'll look at this. This is the Euro US dollar pair. And you can see just by looking at the daily chart, and let's just look at the last month or so, which is right here, that's pretty much an uptrend, isn't it? You know, since the beginning of June. I mean, you could ask a 6-year-old and they'd tell you that that's going up. One very easy way to tell this is, if you can't really see that and you don't have a 6-year-old around, is to use just use a moving average. Josh Lukeman, a fellow, wrote a book called The Market Maker's Edge. And in that book, he suggests that for short-term traders, like for day traders, that you might want to use an 8-day moving average. And that's what this red line is on this chart here. And that removes any doubt about which way the immediate daily trend is, doesn't it? So if you look at this, zoom this in a little bit here. This is the 29th of May. Well, from the 29th of May till right now, okay, have a look at that. And, you know, just ask yourself, how would you have done if you kept trying to sell all the way up here instead of buying? Well, probably not very well, right? Because the thing just went straight up. So the easy money has been to the long side. And what we like to do is get in on the trend by buying dips in the uptrend using intraday charts. And if it was going down, we want to sell rallies in the downtrend. So, and you can just see that here. I mean, if all the way down here, it's a pretty good little indicator. I mean, you're just closing below the 8. I have an exponential moving average on here, whatever you like, but you know, you're just about always on the right side of the market, at least that you're trying to do. You may not get a setup, but that doesn't matter. That's what you're trying to do, is buy in alignment with that trend. Let's have a look at the price action from today, which is Thursday, June the 13th, as I'm recording this. And so this is just at a 1-hour chart. And remember, I want to keep this in mind now while I'm talking. The daily trend bias, according to the 8-period moving average, is up. Okay, remember that. What happened? We had this little rally up here into London, and it went all the way down from the London open to the London close. Okay, now, were there pips to be made by selling? Sure there were. Right, lots of pips. But here's what you need to be aware of. You're selling based on a smaller time frame, like a 1-hour chart moving down here. Maybe you could even put a 15-minute chart on. That does not have the strength of a longer term time frame that's moving up, like what we saw on the daily chart. If you're going to do that, if you're going to be selling, it's very important to keep in mind where you would expect the uptrend to resume again. Okay, and one of the patterns that we use to find those reversal points, we use a few things, but we use our pattern number 3 and 4 in the Recurring Forex Patterns course. And today in the Coach's Corner, I showed a trade that I actually took here. I saw it set up on this pair just the way we like to see it, actually right here at, and I didn't make this up magically just for this weekly trade example. It really did set up properly at about 132.80, which by the way is a pair personality number anyway on this currency pair. It was a Fibonacci external retracement level that matched up perfectly with a 6-hour slingshot trade. So I was very comfortable taking a long in there because I know I'm trading with the daily trend, and it ran up about 90 pips up to this old resistance right up in here. And time of the day, by the way, is another good reason to be looking to take this trade off. That's a whole nother issue. But the point I'm making here is that the higher level time frames were still telling me that it was going up, not down, even though we had this move during the day that was down. The daily chart is in momentum, as evidenced by the technical indicators that we use, and it still is, as I'm recording this. It's still heading up. Even we got this little move coming down, so big deal. Now I got to tell you this. I am watching this level up here very carefully on the daily chart, and I'll tell you why. This could be a top in here right now. We've hit this level. I use these support and resistance lines. If you don't like to use them, don't use them. I mean, I just use them as reference, because if I want to buy the dips in an uptrend, if you look at these lines where there used to be lots of support resistance, as price comes back down to them and I'm closing above this 8-period moving average line, I want to look to buy the dips at these levels in here. These are good places to look for reversals. It goes up, comes back down to this really nice old level here, goes back up, it comes back down again, didn't quite make it there, went back up today and came down to it again today. This is where I got in down here, and it went back up here again. So I'm watching this as very careful up here on the higher time frame charts, because we could be at resistance here. But we'll have to see. I mean, I'll be watching to see if things like the 4-hour chart and that start to turn over and head down. On the 4-hour chart, we have some, and on the daily chart, by the way, we have some key levels being hit here using Fibonacci external retracements. We have candlestick action that's telling me that we might be heading down here. We have this possible negative divergence with the price going higher and the MACD going lower. Now, it's not qualified the way that we like to see it. You might want to watch this big trend line to see if it breaks. These will all be signs that we might be at a top in here. Okay, now, and by the way, we came back up and retested this high here today, and it failed here so far. Now, I've got to tell you this, none of this means that the trend is going to necessarily go down. Okay, but I'm just saying that there's warning signs, so you need to be watchful. I don't make predictions about what the market's going to do because I have no idea, but I can only follow what price is telling me. Okay, so I'll leave it there. You know, there's all sorts of ways to trade. No matter how you want to trade, when all is said and done, I mean, you can, you know, get these levels down here, even though you might have thought that it was a downtrend happening here on the 4-hour chart. I'm still in an uptrend on the daily chart, and I had a perfect alignment with my pattern number 4 together with a 6-hour slingshot. To me, it was just a really good setup. And you know, with a 15 pip risk, there's over 90 pips in that trade. I didn't get all of them, by the way, but I got a real nice reward to risk, which is here nor there. The point is that you want to keep your trading in alignment with this trend until it proves to you that it's not going up anymore. Okay? At the end of the day, no matter how you're going to do this, your job is to manage risk, plain and simple. That's all you are as a risk manager. You want to take on trades that have a minimal amount of risk, and I had 15 pips of risk in this trade. And you do that by learning how to pinpoint your entries so that you have very small risk, right? And you have the on the upside of it, you have correspondingly large reward potential. And as the trade moves in your favor, you absolutely must manage the risk out of the trade as soon as practical. Get it out of there, and you're on your way. Anyway, that's enough for that one. I hope that helped and made some sense. Just wanted to show you kind of the things that I look at in trading. And you guys have a great weekend and week ahead, and we'll be back at the end of next week with another weekly trade example. Thanks so much.